Hello everybody, this is Mike from MBoxWave.com, and I just got into a short position on this morning's Emini Dow, and I saw a good setup, so decided to record it and see how it works out, and we'll go through the analysis here and you know and then see what happens. So basically, the market's opened here at 9:30. We came down, and there's this nice triple algorithm here, right? So we got a pullback sell, a Stooges sell, and a sell imbalance. The minus 92, which means there's more selling than buying on this up wave. All right. So the first thing, what I want to show is, it's important that we are taking trades in the direction of the order flow. All right. Now look, we're already moving quickly. We're already $1,600 in profits. Well, it's moving right now, but anyway, so this is very important, because people ask me, how do you know when to take a trade? Because the signals are entry points, but it needs to be supported by the underlying analysis, right? So if we look here, right, and I really like this setup because it looks clear, everything makes sense, right? So supply is expanding here. Supply is expanding. I guess that arrow got kind of lost, right? Demand is contracting, right? So once we came up here at this, higher high, and ultimately here we can see that demand has contracted. All right, got to change the color. All right. I guess really quick, I'm gonna zoom out. So what did I do initially? I drew this line here, right? This is my take profit line right here, because in the previous time, all right, I like to use support resistance lines usually for exit positions. This line was used many times as support, resistance, and then again support, right? We came down, price came down here, well, actually earlier than that. So price came down here. This acted as support, support, support. We broke down, then it acted as resistance here, and then it acted as support again. So that's many times. So that's that's a few times that it acted as support, and it acted as resistance, and we broke through it, and so price tested this level many times. So to me it seems like a significant level, and price usually likes to come back to levels it's been before. So that's the take profit level I chose, and that gives me a good risk reward in this trade. It looks like to be about 3, but we'll check it later. Right, so all right, so demand is contracting, supply is expanding, right? We have this nice triple algorithm, right, which is a triple algo because we have a pullback sell, a Stooges sell, and a minus 92 sell imbalance. All right. And the thing is, when this is accompanied by the underlying analysis, it makes this especially strong. All right. Maybe that looks kind of cluttered. All right, fine. Draw that in a box. Okay. So next, what else do we see? We see an expansion in the cumulative selling right here. That's also increasing, right? So we've got the cum selling also expanding. Right? And we see that compared to the delta here, this is quite a bit more, right? So we see that, you know, the demand here when it came, see, we're making lower lows here. See, we busted through this low right here, right? And what do we see? We see that there's more selling. So that's good, right? Whereas we saw a higher high and demand busted, you know, it contracted, right? So that's the key difference, right? We're breaking through this area here. I can draw that. We're breaking through, we broke through this line here, and what do we see? At the break, we see the supply is expanding in the cumulative delta and the MBox delta, all right? Whereas at this higher high, we saw demand contracting, okay? So, you know, we can see that, right? We see 201.7220, demand contracted there. All right, looks like we may be hitting this soon. All right, well, anyway, so what else did I see? I saw that the pace, right? Initially, we saw a, you know, big pace of bids. And then immediately we saw also a relatively big pace of offers here, right? But the interesting thing here is this big pace of offers, to me, when I took the trade, this looked climactic because there was no demand that followed this pace of offers. So this is actually a failed pace of offers, which supports our bearish position, right? So this becomes a failed pace of offers. Right? It's failed pace of offers. And, you know, we can say that, you know, this showed in the end no demand here because at this higher high, demand busted, right? So here, you know, my analysis concludes that this was no demand. All right. So, you know, how many points of confluence do we have here? You know, let me add this one. We can see here, no demand as well. Right? And if we see this in multiple indicators, looks like we're going to hit it. Look, we're 56. I guess I didn't get a chance to make any add-ons, but that's all right. Look, and right as we're about to hit it, price likes to tease us. You know, the market likes to do teasing. You see it's just kind of wobbling here. All right. It's sometimes frustrating when the market just, it's like dangling bacon right above your nose. It's like it's supposed to be there. We're supposed to, and there it is. And there it is. So we've got $5,750 in profits today. That's a good day for me. I like to, you know, hit $5,000 or more. I didn't get a chance to do any add-ons, but that's fine. You know, I'm happy with today's result in trading, and the analysis was solid. So, you know, let's all right, let's complete this analysis here. So, you know, how many points of confluence did we have? Quite a bit, you know. Let's point out that the minus 385 shows supply. All right. So this is one of the few times I think I didn't finish showing my analysis before the trade hit the target. All right, so how many points do we have, right? Demand is contracting here in the MBox delta. Supply is expanding, so that's already 2. We see very similar in the cumulative delta, no demand and the cumulative selling expanding, so that's 4. Here we see a big pace of bids and failed pace of offers, so that's 6 points. Here we see no demand here. On this higher high, we see a contraction. Do you see this? It goes from 201, 72, 20. Demand is contracting, right? So that's 7 points. Minus 385, showing supply. That's 8 points. And we've got this triple algo. You know, that's 9 points, but triple algo is really strong. You know, maybe you can say that's a 2 points. So we've got at least 9 points of confluence here, you know. I usually tend to notice that trades when you've got, you know, almost 10 points of confluence that all add up, the trade is a very high probability trade, you know. So, you know, the analysis was solid. So basically, I exited here. You know, let's run the risk reward. Let me turn on the order fills here. All right, so this is where we got in, this is where we exited. All right, so basically, right, so I put the stop here above the swing point. I got in here, that's what it's saying, and we got out here. Because that timer, let me move this timer or delete it for the sake of showing. I could have just moved that. All right, that's fine. So look, we got, you know, 3.11 risk reward. So that was very good, you know, risk relative to the reward. And those are the trades that I'm looking for, you know. So due to the all the confluence, we had a high probability trade. It worked out great. And so that's it for me today. I hope you guys enjoyed this video, and I'll catch you next time. Bye-bye.